Imagine someone sitting in a fancy office, moving Indian stock market like puppet, making crores while millions of traders lose everything. Sounds like a movie, right? But this is real. Today we will expose a shocking truth about a mysterious player manipulating the market and what it means for traders like you and me. We will start with introduction. What is option trading? Who is a manipulator? How the manipulation work? The impact of manipulation. What Sebi is doing? What traders can do? And we will also see everything piece by piece, bit by bit, so that you can understand the whole picture point by point. Before that, if you can remember what happened on April 18th, 2024, it was a nifty expiry, and let me show you the chart so that you will understand. Nifty alone fell around maybe 350 points, if I'm right. Yeah, 350 points, sorry, 350 points. If you can see here, nifty opened at somewhere around from around 22,300. It fell to around maybe 22,100, or even below 22,000. It touched 22,000, almost 22,100 in just matter of 10 minutes. That's a 200 points down movement in just one trading session. And since I don't know anything about the market, and since I am always wrong, I most of the time I am wrong, what we did is, on that particular day we made a profit of around 3,05,543 on that day. I don't know anything about the market, and I'm most of the time I'm wrong. And this profit was made not by buying option, selling options. So that was the time expiry day trades was very very famous, and we were eventually literally doing expiry days on a daily basis. Now coming back to our point, coming back to our thing, manipulation, how the manipulation works, how the market is work. First point is introduction. In this we will talk about the context and why this matters. Right now, the since April 2024, the Indian stock market has witnessed a strange sudden movements, especially on weekly expiry days for option contracts like nifty and sensex. These movements aren't random, they are part of a pattern that points to a manipulator who's controlling the market to make massive profit. And why this matters: option trading is already risky, and now it is becoming even more dangerous for small traders. If you know, over 90% of individual traders lost around 1.8 lakh crores in the last 3 years in option trading. This manipulation hurts not just traders but also long-term investors and India's financial reputation. Second, what is option trading? I will give you a simple example explanation. I am not going into what is option trading. Options are contracts that let you buy or sell something like Nifty or Sensex at a specific price on a specific day. Traders use two types of options: call options, you buy these if you think the market will go up; put options, you buy these if you think the market will go down. And there are terms like a strike price, the price at which you agree to buy or sell; premium, the cost you pay to buy the option; expiry day expiry day, the date when the option value is decided based on the market closing price, which is and it is risky. And why it is risky? All these terms you know, but it is risky. Options are cheap but can expire worthless if the market doesn't move in your favor. It is a zero sum game. If one person wins, someone else is going to lose, right? Now, who is the manipulator? Third point, who is the manipulator? Now, if you understand who is the manipulator, you have to understand in terms of, let me give you an example. Eurofund is a hedge fund which is based out of US, and it is handling handling an amount of AUM of around 1.25 billion US dollars, in terms of I'm talking in terms of US dollars. Right now they have really good holdings in all Indian companies, from let's say Reliance, HDFC, ICICI, Bajaj Finserv. So lots of they are having FMCG, from FMCG to almost everything, oil and gas, everything think they have good holding. Now these are all the funds, these are all the hedge funds which are manipulating. Now how they are manipulating, there are two types of manipulation, which is in terms of let us say violent expiry and silent expiry. So we will talk briefly about that as well. Now what we believe is that the manipulator is a foreign hedge like Eurofund Limited with the deep pockets, possibly managing billions of dollars, right? They use their financial power to control India's stock market during key moments like weekly expiry days, and the goal is make crores by manipulating the price of options on the market index. Forcing small traders to lose money while they walk away with huge profit. The scale of manipulation, the manipulator is estimated to earn around 500 crores per year, and that works out to be around, let's say, around 25 to 30,000 crores a year. Now they use two strategy. First one is violent expiry. On these days the market moves wildly. The manipulators buy huge quantity of options, both call options and put options, on maybe 9 o'clock or 9:30 or 10 o'clock. Then they use their money to move the market by buying or selling stocks like, let us say, Reliance, HDFC or ITC. This causes the market to swing up or down, making their options highly profitable. And the second one is quiet expiry. On these days the market hardly moves. The manipulator sells options, both calls and puts, and ensures market stays within a very tight range. By keeping the index stable, they keep the premiums and make crores without paying out to traders. Now let's say a real example. I have already told you a real example of what happened on 18th of April 2024. Now if you go to 13th of December 2024, it was a violent expiry. The Sensex moved around 3000 points in a single day. The manipulator likely made massive profits while most of the traders lost heavily, right? And if you see on the contrary, 21st of November 2024, the Nifty stayed within a range of I think around 0.50 percent, just not even points, and it is around maybe 0.15 percent. So the manipulator sold options and ensured that the market didn't move, keeping all the premiums. The tools they use is futures, and futures allow them to control the market with less money. And there is implied volatility. When they buy a lot of options, IV rises, making options more expensive. When they sell options, IV falls, making them cheaper for others but profitable for manipulators. And that is what we have told. Whenever we have made a separate video on this. Whenever there is a huge premium, it will be very attractive. You will think, even at times like around on an expiry day 2 o'clock or 2:30, you will see that there is a premium. Nifty, I'm talking about Nifty, there will be a premium of around 250 rupees, 270 rupees. And this is why when they buy buy put option and call option at huge quantity, what will happen is implied volatility will increase, and obviously premium will also increase. And what they will do after they increase the premium, they will either go long in shares, or they will sell their shares, so that there will be a huge swing and their call option or let's say put option will be in profit, which they have bought, right? Now what is the impact of this manipulation? See, on traders, small traders often lose their entire premium because they can't predict these manipulated moves. Even experienced traders find it difficult to compete with such a powerful players, right? Now, if you know, there is a very famous YouTuber, very famous trader based out of Chennai. He used to make a good profit. He used to make good returns. But of lately, he is not able to make money. He is in huge loss. In fact, he has stopped posting whatever profit or loss in Twitter. He used to post every day for the last 5 years. or 7 years, but he has not posted any video or posted any tweets on X platform. So that much is the manipulation, and that much is the volatility we are experiencing in this kind of market. And since on that day, since I don't know about the market and I am always wrong, most of the time I am wrong, I sold options and made around 3 lakh rupees. You saw that. Okay. And not only investors, not only traders, in terms of investors, sorry, in terms of investor, long-term investors are also forced to buy or sell stocks at manipulated price, affecting their returns on Indian markets, right? Such manipulation damage the trust of India's financial system. If it makes India look less attractive for global investors, right? That is the whole point here. Now the fourth point is, what is Sebi doing? Now what Sebi has done is, Sebi has already reduced the number of, that's why they have reduced the weekly options from daily to around, I think now only on a month you can find maybe less than 10 weekly options, right? Banknifty was a weekly option, they have removed it. And FinNifty, Midcap Nifty, Banknifty, everything has moved to last week, right? So they have reduced the option to control this excessive trading activity. They are also aware of the manipulation, but haven't taken any concrete action against a player. What more Sebi has to do is, Sebi must increase the surveillance and catch these manipulators, stricter rules and transparency in options market, and need to protect small traders. That's what they are doing, but they are not concrete, right? Now what traders, fifth point, what traders can do: avoid speculation game. I have told this many times, stay away from risky bets, especially on expiry day trades. There are many comments when it comes to expiry day trades. People post, I have made so much loss, I have made this much loss, that much loss. I've told them, we have stopped. In fact, we literally put in our social media platforms that we are not trading expiry day trades. We have stopped expiry day trades because they are used to it. They are moving like anything, making two-way, three-way moves, and it is very hard for people to trade on expiry day trades. And focus on risk management. Always calculate how much you can afford to lose before entering a trade. Understand the market pattern. Learn to identify whether the manipulator is preparing for a violent or a quiet expiry. Avoid trading against the trend. Educate yourself. Option trading is a complex, and manipulation makes it even harder. Invest a time in learning and improving your strategy is what I will say. Now this all brings to our last thing, why we are so much focused on FIAs. If you are seeing our videos, or if you have seen our videos, we always say we don't follow any indicator, we don't study any indicator, or we don't study any chart patterns. All we do is look what FIAs are doing, or what FI institutions are doing, or what foreign portfolio investors are doing, because we believe that market makers are those people who are having huge people, and huge people can only sustain in this market. So the big picture is, the story isn't just about one manipulator. It's about the need for fairness in Indian market. Traders must stay vigilant and work smarter to survive these challenges. Let me know what you think Sebi should do to stop these manipulators. Have you faced losses because of such moves? Let us know on the comment section below. And I will end this video here. I have talked already around 15 minutes. I'll see you in yet another video. Till then, take care. Bye.